The stock market saw a sharp decline on October 23rd, 2024, with the Dow Jones Industrial Average suffering its worst day since early September. The Dow dropped 409.94 points, or 0.96%, closing at 42,514.95. The Nasdaq Composite fell 1.6%, ending at 18,276.65, while the S&P 500 lost 0.92%, closing at 5,797.42. Both the Dow and S&P 500 experienced their third consecutive day of losses. A major factor behind today's slump was the rising Treasury yields, with the 10-year Treasury yield reaching 4.25%, its highest level since July. Higher Treasury yields typically signal more expensive borrowing costs, which can weigh heavily on both businesses and consumers. Additionally, large cap stocks like Apple and Nvidia were under pressure, both falling more than 2%, while McDonald's dropped over 5% due to an E. coli outbreak tied to its quarter pounder burgers, leading to hospitalizations and even one death. Welcome back. Today's stock market took a major hit, with the Dow plunging over 400 points. But what does this mean for you? Even if you're not an active trader, today's market moves affect your wallet, your loans, and even the price of goods. Stick around as I break down why today's market matters for everyone. Today, the Dow tumbled 409.94 points, or nearly 1%, closing at 42,514.95. The Nasdaq dropped 1.6% to finish at 18,276.65, and the S&P 500 slid by 0.92% to close at 5,797.42. This marks the third straight day of losses for the Dow and S&P. You might be thinking, I don't own stocks, so why should this concern me? Here's why. The stock market influences borrowing costs, your retirement savings, and even the price of everyday items. With Treasury yields rising to 4.25%, the highest since July, borrowing is going to get more expensive for everyone, whether it's a mortgage, car loan, or credit card debt. Higher Treasury yields mean banks are going to charge more interest, which means higher monthly payments for you. Meanwhile, falling stock prices can reduce the value of your retirement account, and businesses might cut costs or raise prices in response to market downturns. The stock market moves in cycles, and we're currently in the later stages of a bull market that began a couple of years ago. But with today's losses and the rising yields, analysts are warning that we could see more volatility in the near future. This doesn't mean you should panic, but understanding where we are in the cycle can help you make better financial decisions. According to experts, including Brent Schutter from Northwestern Mutual, the market is adjusting to higher interest rates. Schutter points out that as rates rise, different parts of the economy will feel the pinch, which could lead to more volatility in the stock market. Let's break this down further. How does today's market performance impact your day-to-day life? Your retirement savings, if they're invested in the stock market, could take a hit. A 1% drop may seem small, but if that becomes a trend, it could lead to significant losses over time. Rising Treasury yields, meanwhile, are going to make borrowing more expensive, whether you're looking at a mortgage or trying to finance a new car. When businesses face higher borrowing costs, they may also pass those costs on to consumers. So we could see prices rise even for basic goods, which could tighten your budget even more. So, what should you do? First, don't panic. Markets fluctuate and downturns are part of the natural cycle. Focus on long-term goals rather than short-term moves. Diversify your investments so that you're not too exposed to any one sector. And finally, keep an eye on interest rates. If you're planning to borrow money, it might be better to lock in rates now before they rise further. If you're unsure where to start, meeting with a financial advisor can help you develop a strategy that works for your situation. The key is to stay informed and prepared for the shifts ahead. The stock market affects everyone, whether you're an investor or not. Today's drop in the Dow and rising Treasury yields might seem like just numbers on a screen, but they can have a big impact on your finances, from your savings to your interest rates. Make sure you stay ahead of the game by staying informed and making smart financial choices. If you found this video helpful, hit that like button, subscribe for more insights, and share this with anyone who wants to keep their financial future secure. Thanks for watching.